Hi, this is Joseph. In this video, I'm going to talk about one particular concern that I get, which is a question from a lot of prospective trade copier subscribers. So they want to know if I trade right around the news. I've made several videos on this, but it's always worth repeating because sometimes people hesitate if they think that they're going to be using a signal service or a trade copier service, copying trades from another trader, and they want to know if that trader is trading right around news events. So the answer is I might have a trade that's open before the news, and I might get a trade that is triggered or set up as a result of the news. So those two different scenarios are very important to be aware of. First of all, you can see this one here on the dollar yen. This was a breakout. This was an opportunity to get into the trade. And you can see that this right here is the spike with the news. This was at right there. It reads 5:15 California time, so that's 8:15 New York time. This was with the ADP. So this was an opportunity to get into the trade, but it was already in, it had already created that downward momentum here on the dollar yen to the downside anyway. Looking at a 5-minute chart, you could see it. Looking at a 1-hour chart, you could see it. I do use some momentum indicators to kind of give me a little bit of confirmation here, but it is a breakout. I'm also looking at specific pivot points. And in this case, you can see that there was a clear breakdown right there with that pivot point. And there's a few other little things that I'm looking at. I'm also reading the bars and I'm looking at volume on another chart. But that's, that's not the primary. It isn't an indicator that's putting me into the trade. It's just the indicator in some cases that's giving me the confirmation. I get that question quite a bit whenever I bring up the idea of an indicator or I have an indicator on my chart. What indicators are you using and how do you use it? Again, I use indicators to confirm what I see as far as the price action in the chart. I think it's very important to be able to read the chart based on what the bars or the candles are showing you anyway. Some of you have also seen some of my old videos where I'm using point and figure. There, I'm not using any indicators. I'm just using the price action all by itself. So there has to be a certain degree of volatility that's created to create or to set up an opportunity like this where we see momentum to the downside. Um, anyway, you can see that I was in the trade long before the news. So there really isn't any risk in that regard, especially when it starts to move quite a ways away from the actual entry. So it is a really good opportunity. You're in the trade. If you're going to be copying my trades, I'm in the trade long before the news it comes out. And then if I don't get a trade before the news and I have to wait until after the news, let's say, for example, this was during the news or leading up into the news, and it was kind of in a really tight range of consolidation. It may be that the breakout would occur with the news and then I would get my setup and then I could get a trade opportunity. Now, the biggest reason that I don't trade the split second that the news is released. Number one, first of all, you can lose a lot of money doing that. It is fun. It's even more fun if you know what you're doing and you happen to be on the right side of the move, but you can't always guarantee that you're going to get a decent fill. And I know that I have a lot of subscribers that are copying my trades. And just because I can get a decent fill, if I was to jump in, let's say I was to jump in the split second that this news was released. Again, I may know what I'm doing and I may get a good fill, but that doesn't guarantee that all of my subscribers are going to get a good fill. So I don't do it that way. And I don't really care to do it like that. Like I started trading, back in 2000, 2001, 2002, and I would trade the news like that, the way I just described. I would wait. It was exciting. I would do a lot of analysis to try to figure out if I could guess what the numbers were going to be with that particular report. Yes, it's a lot of fun, but it's not necessary, and you can lose a lot of money very, very fast. And then you're at the mercy of whatever your broker's doing. Right at that time, they may not let you out of the trade where you're trying to get out of the trade. That happened to me quite a bit. All kinds of things can happen. So I don't do it that way, and it's not necessary. We can make a lot of money by simply waiting for setups either after the news or getting into setups that are identifying the momentum, because at that point, usually what you can see is that certain traders or smart traders at that point have pretty much determined what they expect the outcome of that news event to be. And that is very often why we see moves like this setting up. it's not necessary to really try to go in there and understand all of the details of the news, at least to make money, to make a specific opportunity work in our favor. We can read the momentum here in the charts. Again, it really comes down to being able to read either bar charts, candlestick charts, whatever it is that you're using, Renko, point and figure, to be able to read the price action without indicators. And you can see the momentum shifting in your direction. And this is all leading into that news event. You'll find that that happens over and over and over again. Now, I do want to answer a couple of questions. So the average stop loss is one of the other questions that I get. It's like number two. What's the typical size stop loss that I use? And you can see here in this example, it was about 15, 16 pips. And almost all of my trades are 2 for 1. Sometimes if it stalls or if I misread something, I will get out 1 to 1. You know what I mean? It might look like that. You might see that there's an initial stop loss of, let's say, 10 to 15 pips, and I only earn 10 to 15 pips on the trade. So it's not necessarily that I'm scalping. It's just that there may be something wrong with the setup itself. So there are different types of trade setups that I'm executing. There might be breakouts, trend reversals. You can see that this is a trend reversal and a breakout. And if I'm not in the money by the third or the fourth bar, then something's wrong. It's not moving in the way that I expect it to based on that particular setup. So if it's not, I've got to control the risk and I'll shut down the trade, take whatever's available, and then look for the next opportunity. I remember hearing one psychologist, a trader psychologist, and he talked about how some people will talk about looking for trades as like you're hunting, you're stalking, and you're waiting for it to come into your crosshairs. And then this other psychologist was talking about how it's more like a cougar. It's not like a cheetah. A cheetah would hunt down their prey, right? They keep chasing it, chasing it, and chasing it. At some point, they'll cut at a loss, but generally, they're going to outrun that prey. A cougar does things a little bit differently from the way this trader psychologist was explaining it. He says that a cougar will sit up in a tree, for example, and wait for its prey to come down below him. He'll pounce down and jump on top of it. And if that prey gets away, he won't chase it. The cougar just jumps right back up into the tree and waits for the next opportunity. He won't expend the energy. And I kind of think about it in the same way. Trading and the way I do it is very, very similar. If the trade is not working out the way I want it to in the first 3, 4 bars, the way it usually does on a perfect setup and a perfect trade like that, then I'm going to take whatever is available. And it's possible that there's something wrong with the trade. Maybe I misread it. Maybe the market's about to shift and change. So we want to keep the losses small, very, very small, so that when we do get the perfect trade, it's going to likely run just like this, and we're going to make the bulk of our profits on a trade like this. So again, this one worked out the way I expected it to, so there was nothing wrong with it. Even if it is pulling back a little bit, there's nothing wrong with the setup. It's just a matter of observing and watching the behavior. Doing this over and over and over again, year after year, you get a rhythm to these trades and how they set up. So the stop losses are relatively small. I do not use like 100, 200 pip stop losses. I know that a lot of other signal services do that. It's just not necessary. And the lot size is another question that I get. Now, I've got some specific strategies in my members area. Once you sign up, you're going to get a link to the members page, and on the members page, you're going to see several different videos, and I offer some suggestions about starting off and building your account. I don't recommend starting off right away when you start copying my trades. If it's a brand new trading account with a funding company, don't start off with like the maximum lot size that you could possibly use with that company. I recommend doing maybe a quarter of that size or half that size that you would normally use, and then do that for the first 3 or 4 days, and then make sure that the trades are coming in positively and there's some equity built up in the account, and then you slowly start to increase the lot size when there's an increase in equity. That's a much safer strategy. Now I'm generalizing here, but I do have videos that will explain how to do that. You can ask me questions when you're trying to increase it, when you're using my trade copier. If you're copying my trades, I will give you some suggestions throughout the weeks as you get closer and closer to the 10% target. Usually it's going to be a company that I recommend anyway, like Lark or Mint Funding. So we know what the target is and we know what the daily drawdown is. We want to stay away from the daily drawdown, far away from that. And then you'll notice that you're going to get closer and closer. As you get closer and closer to the 10% target, you'll get there a lot faster than, let's say, the first 3 or 4 days of copying my trades. I recommend starting off small, starting off low leverage, low lot size. You want to be able to watch the trades come in, get comfortable with the trades to see exactly what it is I'm doing, how the trade copier works, and then you can slowly start to increase it, and it's much safer. You don't want to blow up that trading account. So let me show you um, one last tip. If you're going to be using any of the companies that I recommend, this is Mint Funding. I'm going to scroll down here, and I think it's very, very important that you're aware of what add-on or what extra option you need to make the trade copier work. So let's say if you were to start off with a $25,000 account. Now I have a fire starter challenge. It's a fire starter prop firm challenge. You can start off with the smallest account. If that's all you're comfortable with, if that's what you're comfortable with, do that. You don't have to start off with a 100,000, 200,000, or even $1 million account. But if you're comfortable with that, you can. You do not have to start off with the $25,000 account. But let's just say, for the sake of this example, you're going to start off with a $25,000 account. Make sure that you use the MT4 option. I'm going to click that now, and then I'm going to show you which options you absolutely have to make the trade copier work the best. So you want to click on the one-step evaluation and then click on, let's say in this example, it's the $25,000 account. You click on 8 cap. You have to highlight these and then click on MetaTrader 4. MetaTrader 4 is the one that works with the trade copier. Now you'll see once you do that and you've clicked these options, there are 4 add-ons. I never hold trades through the weekend, so you don't need to add that on. You don't need to buy that. Double leverage. I've always been able to pass a challenge without this. I've never needed the double leverage. It's just not necessary. I mean, I can go on and on about it. I've made videos about it, but you don't need that. That's just an upsell for them to make more money on the sale. Now, you do need the no stop loss requirement. This will remove the stop loss requirement from your funded account. Now, the reason that you do that is because their system, the funding company system, sometimes does not detect my stop loss when I click the buy or sell. Now, I want you to know, in every instance, in every trade, with every trade, I will always enter a stop loss. I do not open up trades with no stop loss. I want you to know that you're going to be protected. I will always enter in the stop loss, but their system sometimes is not fast enough to detect my stop loss. It just detects the buy or sell, the direction, right? The buy or sell. And then it does not pick up the stop loss, even though I've entered it. So in a situation like that, the funding company will reject the trade and then they'll send you an email. It's an automated email, and it'll say you're in soft breach of, our rule. You got to make sure that there's a stop loss. Well, as it turns out, I always enter in a stop loss. So the way to bypass this situation so that you don't have to worry about rejected trades, get this no stop loss requirement. Get that added to your purchase price. So look down here over here right now. Without purchasing any of these options, you can see that the $25,000 account is just $250. But if I click this, it's now $275. That's really the only extra option that you need. And that's what will make the trade copier work much, much better. You won't have any trades rejected. Now, just because you have this option added to your account, their system will eventually see my stop loss with my trade. It will eventually fill it, but it doesn't do it instantly in some cases if their system's a little overwhelmed. At least that's the information that I get from these companies. That's what they've told me happens. So again, make sure that you get this no stop loss requirement removed, but know that I'm always going to enter a stop loss. I'm always going to protect you. I do it with all of my trades. I always enter in a stop loss. Now, the only other option, and I get this question quite a bit, should I get the 90-10 split? That's up to you. That's just something that, if you start off with a $25,000 account, you want a bigger payout sooner, then I would recommend, if you can afford it, get the 90-10 split. And honestly, I would recommend getting the 90-10 split on any of these. That's what I do. But you don't have to. You really don't have to. You can add that on later, or you can start off with a 25K account and just get this option, the no stop loss. And then once you get paid out, you get your real cash payout and it lands into your bank account, you can then purchase the next whatever size account you want larger, whatever you can afford with that payout. But again, you're going to be able to afford a bigger account if you get the 90-10 profit split. So that is an extra 20% stacked on top of all of it. And you can see if I click that, it brings the total price to 325. That's not bad either. To get access to, trading $25,000 in capital and all you're paying is $325, that's a great opportunity. But not everybody can afford that, and that's okay. There's nothing wrong with that. There's nothing wrong with starting off with the bare minimum and then building your account. Because within the year, even if you started off with the smallest account, you should be able to get to the $1 million account doing it exactly the way I recommend doing it in the Firestarter Challenge. So if you click on the link just below this video, there's going to be a link to the Firestarter Challenge. You can sign up to do that, and you can start off with the very smallest account if you want. And at some point in the future, as you increase these your accounts, you can also add other accounts from other prop firms to the trade copier. And now you're sort of spreading out your risk. You have an account over here at Mint. You can have an account over at Lark Funding. You can do that in the future. You don't have to do that right away. You can slowly start off with whatever you can afford or whatever makes you comfortable. If you're sort of leery about the prop firms and my trading, copying my trades, I get it. I totally understand. I would do the same thing if I felt that way, and I would start off with the very smallest one and then see what happens when you get your payout. When you get your payout, you can purchase the 200K account. And when you get the 200K account and you get a payout on that one, then you can buy the $1 million account. And you can increase and grow without ever having to buy any other accounts. You just need to buy the very first one, your starter account, and you can grow and increase and get all the way to the $1 million account or the $2 million account with just your payouts. You never have to buy any more accounts. So in other words, you can end up with a $2 million account at some point in the future, all for $375, or I'm sorry, $275. And if you want the 90-10 split, it would cost you $325. And you can do all that with this starting price. It is possible. It is very, very possible. And these are great opportunities to work with these funding companies as long as they continue to offer them and they continue to pay out. This is what you want to do. You want to do that right away. Like I am taking advantage of every prop firm that I trust and that I research that I know has payouts and allows the use of a trade copier. I purchase them and I connect them to my trade copier. Thanks for watching. If you've got any questions, please let me know. You can send me an email. The email is at the bottom of my homepage.